Okay, we are streaming to YouTube, and we are ready when you are.
Okay, I'll call this work session of the Seward City Council to order. It is Monday, August 25th. It's 5:30, and we're going to be having a presentation on our audit from our auditors, but I'm going to turn it over to the city manager first.
Thank you, Madam Mayor. I am just going to turn it right over to Grant so he can give us a great presentation.
Cool. Thank you. We have a lot of time, so.
That's what I heard, so we'll use as much as you like. So, thank you, Madam Mayor, members of the Assembly. My name is Grant Todd. I'm an audit partner with Altman Rogers. Good to see most of you again, or I think maybe all of you maybe were here last year, except for possibly Cassie. But thanks for having us back. Same as in prior years, we are an independent audit firm. We work for the City Council. When I go over the audit opinions, you'll notice that the opinions are addressed to the City Council. So as part of our audit procedures, there's a number of different things that we do. Kind of the basis of our audit is risk assessment, looking at the higher risk areas based on our knowledge of the city, interviews with management. As part of the audit, we also are required to talk with at least one member of the governing board. This year we talked to Sue. Again, kind of talk about our audit approach. Same thing, see if there's any concerns at the governance level and at the management level, like Kat, other members of management, just to kind of talk about anything that has changed. We also look at prior year results. This is, I think, our 6th audit. So we also draw from that past history to kind of set our risk assessment. And part of our procedures, we test the internal controls that management has implemented. Our work over the profit and loss consists of, we take a random sample of cash disbursements, payroll transactions, and credit cards. So out of the entire population of each of those transaction classes, take a random sample. Historically, or in the current case of you guys, we look at 40 transactions from each of those transaction classes. Statistically speaking, if we look at 40 transactions out of what's considered a large population, that gives us about 90 to 92% confidence that if we find no errors, that those controls are working. But once again, that gives us absolute assurance. Statistically speaking, if you take a higher sample, it doesn't give you a whole lot of greater confidence. So cash disbursements, payroll, credit cards, that gives us kind of the expenditure side of your profit loss. We also test internal controls over cash receipts, money coming in. We also look at billings, utility billings and harbor billings. So that would be the creation of the invoice, recording of accounts receivable, and then we test cash receipts. That's the reduction of AR and the collection of cash. And that kind of covers the revenue side of your profit and loss statement. We also look at material checks or material transactions that include checks and EFTs, essentially outflows. We determine materiality at the auditor level. It's based on a number of factors, but usually we try to base it on current year revenues because that kind of shows the current year activity. And each of our opinion units has a different materiality. That also covers, again, the expenditure. We also look at what we consider material journal entries. Once again, we're testing your internal controls, and what we don't want is someone coming in behind the scenes posting journal entries to, if things are coded correctly up front, we don't want people coming in and moving those transactions behind the scenes. So we also look at material journal entries just to ensure that if there are journal entries being posted, there's a purpose for it, they've been reviewed and approved by appropriate levels of management. So across all of our testing, we're happy to report that there was no errors. Utility billing has been an issue from the very first year we started the audit. I have to report that each year when I do this presentation, the number of kind of problem children or problem bills that we've seen has gone down. And this is the first year that we found 0 errors. Historically, what we've done is taken a random population of 40 from the entire population, and then we focused on problem billings from the past. So, year 1 we took 40, had some problems. So year 2 we had 40 plus 12, we'll say, and then 8, 6. This year we just had 1 that we followed up on. It was Icicle Seafoods. Problems that we found in 23 have been fixed in 24. I know, management worked hard to, there's an outside consultant. I know you guys have spent countless hours and a lot of money dealing with the issue. So, I know during the audit, talking about, the results of our procedures, everyone was pretty happy with that. So, like I said, commend everyone in the room for taking the time and effort, the resources to get that resolved, so. This year, you had no federal or state single audits. That's the first time, you've had neither of those. There was no state single audit in '23. The threshold in fiscal year '24 was $750,000 of federal dollars. If you exceeded $750,000 for either federal or state, you needed a single audit. But in '24, you were under that threshold for both fed and state. I was just talking to Sully. More than likely, you'll have a federal single audit, probably a federal and state single audit in '25, just due to some clean water loans from the state and then the expending of the rest of the money. So our audit was a little bit smaller. Like I said, normally if we do a federal single audit and a state single audit, those are particularly separate. We give separate opinions on that portion of the audit. Once again, since you're under the threshold, no single audit was performed, and you won't see a federal schedule or a schedule of expenditures of federal awards and a state schedule of financial assistance. In prior years, that was a separate packet, and in the third packet, we broke that out, I think, 3 years ago while we were waiting for Providence to finish up, or KPMG to finish up their portion of the single audit related to Providence. But, so once again, no third package this year related to that portion of our audit, because we didn't perform that audit. So, that also should say, this meeting is for you. Happy to answer any questions. The book in front of you is 120 pages long. I want to cover 25 pages maybe. So if there's anything about our audit procedures, any questions as I'm going through it, please let me know. I'm happy to, pause the presentation, answer any questions, or save them up for the end, whatever you prefer. Happy to do it either way. So quickly, I'm going to jump to page 1, which is the second tab, financial statements. Page 1 is the independent auditor's report, just kind of a quick summary. Once again, as I said originally, we work for the city council. The opinion is addressed to you. So this is our opinion. We've audited the financial statements of the city of Seward as of December 31st, 2024. Second paragraph. In our opinion, based on our audit and the report of other auditors, the financial statements referred to above present fairly in all material respects the financial position of the city. So a couple things in there. So it doesn't say it, but you received an unmodified opinion. There's a summary page later. Unmodified opinion is the best opinion you can receive. This means there was no modifications to our opinion. And the other thing to point out is it says based on our audit and the reports of other auditors, briefly mentioned earlier, Providence is audited by KPMG, separate auditors. We take their financial statements and include it in your financial statement. So we do a reconciliation of the activity in the healthcare facilities or the healthcare fund. We take your activity plus the activity of Providence just based on your operating agreement, the management agreement you have. Consolidate out any like activities or, transfers in, transfers out, revenue, things like that. We consolidate that out, and the net of those two, essentially transactions or two entities are combined together for the healthcare fund. Part of the reason the financial statements are what I'd consider late, we issued these on July 21st as part of your ACFR application, which is you get the Certificate of Excellence in Financial Reporting. The deadline for that is June 30, 6 months after fiscal year end is when they're supposed to be submitted. These were late, but I talked to Sully. Sully said that, she sent a please email to GFOA, and it sounds like they've waived the extension for this year, similar to what they did in 2022 or 2023, but she said they probably won't do it again. So the hope is we get them issued by 6:30 again, so you can continue to receive your Certificate of Excellence. The downside is, once again, as we're working with Providence, getting all the information we need for that consolidation is sometimes cumbersome. It's again not the first time you've heard it, because the downside is, even though there's Seward, Providence, most of the work is done in Seattle at the high level financial stuff, and when a small audit firm from Anchorage calls and asks for information, we're pretty low on the priority list. So unfortunately, it takes some back and forth. Julie works hard to try to get us that information, Kat as well. But it takes some time to process and get all that information that we need for that consolidation. So, like I said, we're continually working, Julie's continually talking with Providence on the best way to kind of speed up that process. So, So once again, that's why there's a reference to other auditors, because we're relying on the audit work that KPMG does over Providence. Bottom of page 1, management is responsible for the preparation and fair presentation of the financial statements in accordance with accounting principles, and for the design, implementation, and maintenance of internal control relevant to the preparation and fair presentation of the financial statements that are free from material misstatement. So I always like to point it out to management and to the governing board. It's our job to audit management. It's management's job essentially to give us, good, clean financial data in which to audit. And I always like to delineate that as, they give us the information, our job is to audit it and give an opinion on their fair presentation. And that kind of sums it up on second paragraph of page 2. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and issue our report. Once again, as earlier I said, we look at material checks, material expenditures, material revenue accounts. By no means do we give absolute assurance. We look at a random sample of your inflows and outflows, revenues and expenditures, look at material transactions. We don't look at every transaction. An audit, if we looked at every transaction, would be very cost prohibitive. So once again, we audit to a certain level, and then there's lots of transactions below that, but we look at every material transaction and every material account and give our opinion based on that work. Starting on page 5 is the management discussion and analysis. This is required supplementary information. Management is required as part of governmental auditing standards and as part of your ACFR application, or in order to submit financial statements that would meet the Certificate of Excellence requirements. You're required to come up with a management and discussion and analysis. Again, it's prepared by management, and essentially it sums up in word form the rest of the financial statements. And it's super handy, I'd say, if constituents come to you with questions, this is where I'd start. Again, it's the financial statements, 100-page of financial statement, financial data kind of rolled together. It does give some good information. None of the financial data in the financial statement, starting on page 17 or back, none of that is comparative. The statistical section shows 10 years worth of data, but kind of the high-level stuff, the government-wide financial statement, the general fund, the enterprise fund financial statements, none of those are comparative. Pages 8 and 9 give you at least a little bit of comparative 23 and 24, fiscal year 23, 24 comparative data. Kind of talks about changes in, budgets, changes year over year. So, again, when people ask me questions about the financial statements, I direct them to the MD&A, because I think that's kind of the best place to start. And if that doesn't answer their questions, then you can dig a little bit deeper in the financial statements themselves. So I'm going to jump to page 17. So page 17 and 18 are the statement of net position, essentially the balance sheet of the city in its entirety. There's a column for governmental activities, which would be the general fund and all your special revenue funds and capital project funds. Business activities column is your enterprise funds. You've got your electric, harbor, SMIC, healthcare facilities, parking, and then those are the enterprise funds. Then you have your internal service funds. They're summarized in the business type activities column. Assets and deferred outflows on page 17. Page 18 is the liabilities and deferred inflows and net position. Once again, this includes all current and long-term assets, liabilities, inflows, outflows. So this would include, for assets, capital assets, net OPEB assets, cash, AR, so current and long-term, and then for liabilities, accounts payable, payroll liabilities, long-term activity being, bonds payable, notes payable, and net pension liabilities, associated inflows and outflows, and the net position. So once again, the city as a whole, current and long-term activity. Kind of the biggest changes citywide: cash, the very top right corner, $56.6 million, was $5 million up from the prior year. And once again, downside is, we're talking about, just remind everyone, 12/31/2024, we're 8 months into the fiscal year at this point, so some of this data, a little outdated, but once again, based on our opinion, our opinion date is 12/31. So cash is up $5 million at 12/31/2024. Accounts receivable was up $2.5 million, and restricted cash and investments were up 1.1. Those are the largest changes between fiscal years. Accounts payable on the top of page 18 is up about $1.7 million. Payable to Providence, which is once again directly related to Providence, was up about $1 million. No other large changes, bonds payable go down each year as you make payments. And then total net position in the bottom right corner, second number up, $220 million, was up $2.5 million from the prior year. Exhibit B1 on page 19, statement of activities, essentially the profit and loss, once again, of the city as a whole. Pages 17, 18, and 19 are considered the government-wide financial statements. Once again, profit and loss of the city includes all current resources, inflows and outflows, revenues, expenditures, as well as changes in your long-term, assets and liabilities. So similar to a business, when you purchase an asset or build something, in a business, it's not expensed, it's put on the balance sheet. Same goes here. So, if you construct an asset, it's taken out of expenses, goes to the balance sheet. Any changes in your long-term, liabilities such as PERS and TERS, or PERS, the pension plans, pension OPEB, changes are run through here. So bottom right-hand corner, third line up from the bottom, governmental activities increased $734,000. Business type activities had an increase of $1.6 million, so total increase in net position of $2.3 million. Once again, there's a lot of numbers that go into that. So, page 20. So from here back is, going to talk about the governmental funds individually, and then your enterprise funds, financial statements, and those focus on kind of near-term resources. Essentially, excludes, at least for the governmental funds, long-term activity, assets and liabilities. So, at year-end, 12/31/2024, total assets for your governmental funds, $22.3 million. Cash and investments were the largest increase, with a $2.2 million increase over the prior year. Total liabilities of $3.6 million. So a quick ratio of roughly 7, which is very good. Current assets divided by current liabilities. Biggest increase in your liabilities was an increase in accounts payable of roughly $700,000. Fund balances across all your governmental funds was $18.3 million. Bottom right-hand corner, second line up. General fund had fund balances of $13.4 million. Of that, $9.8 million was unassigned fund balance. It's actually a decrease of $1.1 million from the prior year. However, it still meets the code. Gives up a code that says you want 3 to 6 months of operating reserves, essentially unassigned fund balance. Of current year expenditures in the general fund, you're at 60% of that, or 60%. So that's essentially 7.2 months of operating reserves. So, above the required threshold. So. Page 22. Statement of revenues, expenditures, and changes in fund balance was essentially the profit loss of the governmental funds. General fund had total revenues of $16.7 million, an increase of $171,000 from the prior year. The second column, non-major funds, that's essentially the accumulation of all of your non-major funds, which would be special revenue funds and capital project funds. Total expenditures citywide, $17.6 million. General fund had expenditures of $16.2 million, which was an increase of $930,000 from the prior year. And then net change in fund balance, the general fund had a loss, a decrease in fund balance of $1 million. And most of that, change from the prior year, there was an increase in fund balance in the prior year. Essentially, you just had more transfers out in the current year, budgeted transfers out, which caused that decrease, because before transfers, you had an increase of $500,000. But in your non-major governmental funds, you had an increase of $2.5 million, so across all governmental funds, an increase of $1.5 million. Jumping back to page 24 and 25, this is the balance sheet of the proprietary funds. Once again, you have 4 major enterprise funds: Electric, Harbor, Schmick, Healthcare Facilities, and then 3 non-major enterprise funds rolled up into the 5th column for your enterprise funds, and then you have your internal service funds. Biggest changes, across your enterprise funds, cash and investments went up about $3.3 million. Biggest increases in the healthcare facilities fund, it increased $2 million, and accounts receivable was up. Total enterprise funds, $2.2 million. Biggest increases in healthcare facilities, but once again, that's primarily driven by Providence, activity of Providence. Liabilities, there wasn't very many large changes. Total accounts payable, $4.2 million, an increase of $900,000 from the prior year, and then payable to Providence increased $1.5 million. It's a liability at the Providence level. Once again, that activity is rolled in. And then unrestricted net position would be under enterprise funds, third line up from the bottom. Total net position across all your enterprise funds, $153 million. Unrestricted net position was $41.6 million, and that was an increase of $1.5 million from the prior year. Page 26, essentially the profit loss of your enterprise funds. Third line up from the bottom, change in net position, essentially how did each enterprise fund do. Electric had an increase of $443,000 the current year. The prior year had a $550,000 loss, so nearly $1 million improvement from the prior year. Harvard lost $628,000. Prior year was a loss of $145,000. Schmidt lost $1.3 million. The prior year it had $133,000 income. Healthcare facilities had an increase of $3 million, and your non-major funds had an increase of $80,000. So overall, across all your enterprise funds, an increase in net position of $1.5 million, which was down about $300,000 from the prior year. And that does include, once again, depreciation, which is non-cash, but still, something to include for sure. Next two pages are cash flow statements related to your enterprise funds. After that is about 30 pages of footnotes, more detailed information about cash, investments, accounts receivable, capital assets, detailed information on debt. So same thing, if you have questions from constituents, another good place to look for additional information. I'm going to jump back to the required supplementary information tab, which is the third page, or the third tab. So Exhibit F1, page 68. This is the original and final budget actual for the general fund. Very rolled up, condensed schedule. Further back, there's a more detailed schedule for the general fund. So this, once again, is required supplementary information by GASB, Governmental Accounting Standards Board. Requires an original and final budget to actual schedule. As you can see, the third column is actual. Columns 1 and 2 are original and final budget. Your revenues, as you can see, came in $1.7 million above budget, with the biggest increase being in taxes. And then total expenditures came in over budget by $100,000. But overall, you budgeted a loss of, final budget of $1 million, came in $500,000 that covered.
Thank you, sir. When you say, excuse me, that the income is from taxes, is that sales tax or property tax? Or both?
Sales tax is, and this is on page 76, is more detailed. Sales tax came in over budget by 1.5, property tax $180,000, hotel, motel room $150,000. Those are the biggest.
Perfect.
Biggest
Thank you. Thank you. I appreciate it.
So overall, you decreased, or you budgeted more transfers out than actually came to fruition. So overall, you were budgeting a $6.8 million loss, only had $1 million loss, so a positive variance of $5.9 million. The next 5 pages are just required information about the PERS plan.
May I ask a question, Madam Mayor, for administration?
Yeah.
Thank you. When we were working on the budget, I remember we went back and forth a bunch about the payroll or pay increase for employees, and we had talked about how we had always forecasted a certain forecast schedule or forecast percentage, and we had been forecasting year after year after year less than we were at, about $1 million less every year that we were generating. Am I remembering that correctly?
Yes. Yeah.
And so then during the discussions regarding the employee we had talked about adjusting that because we felt that was gonna happen again. And am I hearing that it just did?
Yes.
Oh, okay, I just want to make sure that that's.
For the budget
So the
compensation was
forecast-
25, this is 24, but
Correct.
yes, you're
But it's
correct.
showing that it's year after year after
It
year.
is kind of adjusting itself,
Yeah.
yes. you're
Okay,
correct.
I just
But when we
wanted to
look
make
at
sure that I remembered it that way.
So to clarify, as you look into the 2025 audit though, we will not see that high $1.5 million
Because we spent
revenue
it.
because we spent it. We utilize those tax revenues in our budget this year.
Right.
Yes.
But we didn't go, we didn't, you forecasted it properly knowing that we were gonna have it available, so.
Yes.
It should not show that large surplus anymore.
Yes, yeah, perfect. Thank you, great job on the forecasting, thank you so much.
Yeah, go ahead.
Thanks.
If you
Uh,
can.
yeah. So, the change in fund balance of 5.8 million, page 68.
The budgeted, so the second line up under the final column, I'm guessing, right?
Yeah.
Yep.
So, can you explain that a little bit?
Well, that's just a net of transfers in and transfers out, budgeted transfers in and transfers out.
Right.
The negative 5818. I just want to make sure I'm looking at the same information.
I'm sorry, page 68, so I'm on the final column on the right bottom.
Oh, okay, yes, I'm sorry, I'm sorry. There's
The
two
5.8?
5.8s, yep, 5891, yes, sir.
Can you, sorry, I'm trying to get my head around all these numbers, but.
Sure.
So say we budgeted,
You were assuming a loss, your final budget showed a loss of 6.89 million. That's what was budgeted.
yeah,
You guys actually lost $1 million, so you had a positive variance. You came in better than you thought by
Exactly.
5.8.
Which means we're
But this is-
forecasting very, very conservatively.
Exactly.
yeah, that's what I was gonna ask. We're really focusing very.
That's what we
Our
want.
previous budget cycle, we forecasted very conservatively,
And
yeah.
that's what
Yeah.
Mr. Wells' point is
That's
that
the thing.
the kind of justified pay raise coming over part of it.
It does,
It justified the
Yeah.
reforecasting. So we forecasted more appropriately based off of previous years' audits and results. So in the discussions in the FY 25-26 budget cycle, rather than increasing revenues in other departments, we utilized these past forecasts and past audits to recognize that we were significantly under forecasting our revenue streams, and we were able to still conservatively forecast, but not so drastically.
So we're not just putting a whole bunch of money in the bank, we're
Exactly.
putting it back into the economy.
We're estimating what we're going to receive in revenue based off of actualities instead of past formulas that we were utilizing.
Got it. So can I just dig down just a
Yeah.
little bit more on that? So I remember you last year. You traveled really fast. I don't know how to operate in this realm very quickly. I'm not like you and Sully, but maybe a little bit cat, I don't know. But, so there's on the electrical side, and we've had this discussion, and I just want to be clear about this. Right now, we're going through a lot of major upgrades, and we took a bond out several years ago, and we're trying to pay those electrical costs down. And part of that, what we're doing is with our price point on our per kilowatt, it's obvious that we're making money with electricity right now, and we are using that money in the sense to pay down rather than taking a bond out later. Is that what I'm seeing?
Well, on bonds, you have a set amortization schedule, set payments for X amount of years, and there's even a footnote that would go through, so if you go to page 47, there's a detailed schedule of all your bonds for your enterprise fund activities. So, tell me when you're there, Mr. Barlow.
Beyond there.
Okay, so second one down starts with 5 million refunding electrical revenue bond.
Yeah.
So you've got 3.79 million left, 220,000 is due this year. So for each of your bonds, there's a set payment schedule. You can choose to refund them, pay them off quicker. I can't answer if you've
Yeah.
done that, but you've got, right below that, you've got an electrical bond. So you've got two electric bonds, 3.7 million and $8.8 million, and they're on probably, one's doable payable off, paying it off 2038, 2052.
But I believe your question might be referring to the overall upgrades that we took the bond out for, but not in the full amount. So we are not utilizing, we're currently utilizing funds in the electric department to do general maintenance and upgrades, and and then at the end of this year, or earlier in this year, we passed a resolution to allow us to get a bond later on. So there's some small amounts of that have been utilized to fund that larger upgrade, but it will be paid back, and that's not included in that overall. So the money that we earned for kilowatt hours and are utilizing is for general maintenance upgrades and things that our electric department needs outside of that huge project. Things like at the power plant, at meters and things along, or
So would clearing the understory be?
clearing the understory, clearing brush, getting the remote imaging and things along that line. Just general day-to-day maintenance that we had ignored for so long, not the infrastructure upgrades. And so when you look at the revenue that has come in from that is being utilized to make sure the day-to-day operations is successful and continues to be successful. And so we've seen this influx of cash in that realm, but that is also being used throughout the next year. So it's not like, oh, we made money, we made money and we're spending that money right afterwards. So we're clearing trees all summer long. We've been doing all the remote imaging and things along those lines.
You will see the majority of those expenses in 25.
Yeah, you'll see a lot.
From the infrastructure, from the...
No, from general maintenance.
For the operational.
Operation and maintenance.
So when we, so we originally talked about a $20 million price tag for those infrastructure upgrades.
Yes. And we've
only taken 8, is it 8 plus 3? Or is it 8, just 8?
It's,
I don't know when this other 5 million went out.
sorry, which page were you on for that?
That's page 47.
47. And so earlier this year, we were in the process of applying for a second bond for that, if you remember. We passed a resolution that says that if council,
It's a third bond.
the third bond for that, yeah.
It will be.
Oh,
And so we'll bring that back later on in the year if we move through with that option. But that had been a discussion we had earlier this year and passed by resolution.
okay.
Yeah.
It's really hard to keep track of, sorry, it's
Yeah.
hard to keep track of the fact that what's infrastructure and what's day-to-day and what we're paying with from out-of-pocket versus bonds.
Yeah.
Because what you see here is a consolidation of capital and operating budget, not separating those.
Yeah.
But what we are in the process of working on with the electric department is creating an update and a newsletter that shows where we're at in the infrastructure project as well as where we're at with the capital projects, or capital and infrastructure projects are simple. Yeah, so we saw a big call for that in our survey results. So Taylor and I have been working on that and we'll get that out shortly, and we're intending to include it in the mailers that you get with your bills and everything. So we're hoping to demystify that a little bit. But as we're looking at this today, this is just a snapshot on New Year's Eve in 2024 of what that looks like.
Okay, thank you.
Yeah.
Good questions, thank you.
Yeah.
Kind of back to your other question, just furthering, you were asking about that $5.8 million. Some of it, the biggest positive variance is from your transfers. You guys budgeted $8.5 million and only transferred out 4.5 in the general fund. We've got a lot of detailed information starting on page 76. Unfortunately, I don't have a breakdown of what those budgeted transfers were. So every other number that's in your general fund by fund function, Parks and Rec, Public Safety, broken out by object code, salaries, supplies, equipment, things like that. Transfers out isn't broken out, but that's where the half of that positive, 80% of that positive variance, 70% of that positive variance came from you just didn't transfer out as much money as you thought you would.
Okay.
So
So
if you go to page 76, starting at page 76, that's going to be the next schedule. Much more detailed information for the general fund. I'm sorry.
What page are you in? I'm sorry.
Related to budgets, 76 to 81 is the budget. general fund, final budget actual.
So the majority of the transfers out is the 1% for the 1% of sales tax to the hospital is included in that. And then all of the adjustment in the budget during the year that's being transferred out. And I'm trying to incorporate those transfers out in the new quarterly report, so you could see what is going on in transfer in and out every quarter, so.
Then Mr. Wells, page 76 really shows the biggest change that you were inquiring about, where the variances are coming from.
Thank you.
On revenue, yeah. So you can see it by each of your revenue codes, all of page 76, the top of 77 is revenue, and then you go into expenditures by what's called function or object code. After that, on page 82 is the combining balance sheet for all of your non-major special revenue funds and capital project funds. Those 2 pages of balance sheets. And then page 84 is the profit loss for the same thing, your special revenue funds and capital project funds. Biggest increases in fund balance, capital acquisition fund had an increase of $1.4 million. Majority of that is a transfer of $1.18 million. And then the Streets and Sidewalk Fund had an increase in fund balance, $733,000. Once again, that was funded by a transfer in as well. So overall, change in fund balance for us here, non-major governmental funds, $2.5 million. But once again, all of that is coming from transfers, or most of that is coming from transfers. Then after that, page 86 through 89, just detailed information on your non-major enterprise funds, water, wastewater, and parking. And then page 89 is the balance sheet P&L for your internal service funds, the motor pool, and compensated absences. After that, the statistical section, once again, this is just required for the Certificate of Excellence in Financial Reporting. 23 pages of information covering all sorts of different financial metrics. There's financial trends, revenue capacity, debt capacity, and demographics.
Can I, sorry.
Yeah.
Back to parking. Can you, what page is parking?
Parking is on, sorry, I'm going to gloss over that. Best page would be 87 for profit loss.
87? I'm just curious, because we had dealt with parking this year, and I'm just curious to see the change.
I think that was last.
So an increase in fund balance or net position of $269,000. And we don't show a budget actual for your non-major funds, so I couldn't tell you what you budgeted, but you did have a positive change in fund balance.
Right, because we changed parking last year, and this is as of 2024, right? So
Right.
this will reflect that change.
Right,
Yeah.
but that was the first year, so.
Okay, thank you.
You're welcome.
And it worked.
Yeah.
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 Yeah, sorry, I didn't write down what the revenues were the year before, but.
Let it slide.
And then after that, I'm sorry?
It was less.
Well, not having the dock open, the north, I can't remember, was that the northeast dock?
The
Yeah.
northeast.
Was shut, I think, in '23.
Yes.
So that obviously
Oh, yeah.
impacted your ability to
but
make money.
you have a great memory.
Yeah.
Well, I've got here a lot. So I've got some money in that pocket. And then on page 118, because once again, just our scheduled findings and responses. In prior years, this was a larger schedule when we had a single audit, federal and state, and report our opinions and results of those audits there. But as I said earlier, unmodified opinion, and the first time, since we've been doing the audit, no findings, so. So that's going to.
It's more of a statement than anything, to be honest with you. So I think this is my 4th audit that I've participated in. And the first couple years, it was a total nightmare. I mean, every time we sat up here, it was, this. And so I just want to give a shout outs to our administration and to Zuli, because the fact is that when I first sat up here and sat through my first budget cycle and sat through my first audit, I was like, I don't want to do this ever again. This is a total mess between the utility and the fighting and the overcharging and all of that. So I just, great job.
Yeah.
Absolutely great job for all of the administration for cleaning this up, because it was a mess for a long time.
The first cleaning audit from 2016, to be clear. And I just want to thank my team. I mean, without them, this would not be possible, so, yeah.
Am I right? Madam Mayor, this seems to be pretty impressive, right?
It is.
And a big thank you to council as well. I think a lot of the efforts and changes that we've made in the utility billing that have helped solve this issue stems from some of the decisions that you've made up here. So I will say with full certainty that the staff we have both at the water wastewater desk and behind the electric desk right now are some of the best and sharpest employees that we have and are just digging into stuff like this day after day, and it makes this meeting a little bit easier to know that they've been digging into these things or things that could become an issue long before they do. So it's been really wonderful, especially with that addition of a new position over at the electric department.
I just
Go ahead.
just want to echo that, I mean, I've been on here for 3 years this October, and we had to contract all of this out for people that don't remember. It's like, we didn't have a financial department in essence, so, yeah, I agree, so like, nice work. I mean, that's a huge lift, and we really do appreciate all of you guys for the work. Except for Jason, I don't think he did fine.
He was here when we got it. Well, I'd echo the same thing. It makes our job much easier when we show up and things are ready. This, at least 6 years, maybe 7, and the first time we did the audit, the finance director was fired in the middle of the audit, which is the first time it's ever happened to me in 20 years, and so it took forever to get that audit done. And it just, a lot of the years we had additional fees, because our fee is based on show up and do the audit as opposed to show up and provide accounting assistance or help with the reconciliations. No additional fees this year. Suli and her team, had it prepared. So again, I appreciate the council, like as Kat said, putting the effort, the resources into helping Suli, getting training, not having a bunch of turnover throughout the finance department. We have clients all over the state, big governmental clients with utility billings. Your guys is complex, there's no doubt about it, but I think it's getting less complex. I know you guys have spent some money to, bring in outside consultants to help bring it down, but, we used to spend a couple days just, I would make sure people came back year after year, auditors, just so we didn't have to reteach them how to audit the utility system. Is so complex. So, big compliment to Suli and her team, having a good team in place and not having the turnover. Like I said, each year, the first 3-4 years, there was a new finance director, or 2 during the year, and that makes it tough. And so having some stability at the top of the finance department, and the city manager definitely helps. So we greatly appreciate it.
Thank you. Any other questions? I have just an observation on page 114 with the property values. The numbers of permits between 2015 to 2024, there really isn't a dramatic increase.
No.
But I would think probably the 2025 would be higher.
Yes.
Considerably?
Yes, 2025 will be
I know, so
considerably
that's
higher.
where we're going to see
Yeah.
the results of the building that's going on.
So we should be able to break that 31 from.
Yeah.
I mean, we got so much
Oh,
going
yeah.
on.
I mean, that's just looking ahead at where we're heading.
Yeah, we actually recently had to announce that on September 5th, we'll be accepting our last work order for the electric department so that they can make sure they get all of their work orders
Right.
done before the end of the season, which is really exciting to have that issue.
A lot of houses.
Yeah.
So,
Go ahead.
sorry, in 2024, it actually says there were only 24 building permits? 24 houses built in 2024? Or
building
Number of
permits.
permits.
Wouldn't that be like even modifications or
Even,
upgrades?
exactly.
Yeah, just
Add-ons, upgrades.
not necessarily new construction or.
But if you look at 23, it's over 25 million, and you gotta, and it was only
Right.
26, so you gotta figure that,
Yeah.
that
What it
whatever those
is.
projects were, are just now getting done.
Right. There's a whole bunch of new ones.
That's a very interesting page. Thank you for pointing it out, Mayor McClure.
And
I would
next
say
week
that's
it's,
unaudited information. We say in our opinion, the statistical section is 100% unaudited. There's some financial data that we tie to the fund schedules, but these specifically.
But it's
I can't-
interesting.
But very interesting for sure.
Yeah, it's a
to
data
see
that we
23
analyze.
was so
Yeah.
good.
2019 must be the gateway.
Yes,
Permits
correct.
at 10 million.
Probably. huh?
And then the
I do love the
23
bill.
with the hospital, the
So,
Oh, Chugach me
Jug match.
you got me.
In
Oh,
23.
right.
At the 25 million?
in 23.
Oh,
Yeah.
Sweet. Anything else? You've got a whole another half hour to talk.
Well, what can I tell you about now? So I'm happy to answer any questions. I always say that, as I said, I work for you, happy to answer questions that might come up throughout the year. I'm a resource for the finance department, but also for the council, and so if you need anything, let me know. I try to talk to Suli, every couple months to see if there's any questions. There's always new GASBs that are coming out, but
Yes.
I know Suli just went to a training to kind of keep up on top of some of those new GASBs, so.
Nice. Very good. Thank you.
No questions?
Thank you very
Do
much.
you want to see if anybody in the audience has a question? Oh,
You,
Public
Lori,
Is that document available to the public that you're looking at?
Yes, it is. It is.
oh yes, it's a video.
Right, I looked.
Yes, it is on the website as a PDF on our finance department website, and I
this
will double check that it is.
For your audit and financial report, said C23. Just 24.
Are these public?
Is there?
Yes, these are public
we don't
public
get these
documents.
back?
Oh yeah,
Yes, no,
it's
these are-
public. It's all
She
public.
can have
There you go,
one.
Larry.
Yeah.
You can have mine.
And then for anyone out there listening, we will also make sure
Suli has
to post it.
an
Yeah, I wrote it.
Yeah. No,
You don't want my writings.
I didn't write in mine.
I wrote mine.
not to get worried that we're gonna be here for another hour.
Make sure that I have.
Happy to answer any questions.
Good.
Good reading material for bedtime.
Oh yeah.
Well, you can find these little nuggets in there, so.
And I will be sure to include a link to it in the next city manager newsletter so that everybody can access
Yes.
it easily from there if I'm not able to find it on the website right now, on my phone.
Yeah, and if you take things out of context, sometimes it's a little funky, because I read on page 19, the Sea Life Center had a 1.3 million loss, and I couldn't figure that out till I got to page 44, and it was depreciation. But it doesn't tell you that on the original. It's like, what happened there, so.
Well,
It's kind of exciting reading, actually, there,
I think so.
Gloria.
You think I saw this?
I always caution people when they look at the government-wide financial statements, for example, page 19 is a very complex statement, and yes, just looking at it, it doesn't look good on the surface.
Right.
There's a lot that goes into
You
that.
have to keep going.
And I try not to hit too much on, the government-wide financial statements because it's of the long-term activity.
Right.
Especially as it relates to the pension and OPEB plans. There's huge swings in that plan that really cause some huge changes in expenses.
Who do you want to play you in the movie version of The Audit? Since it's such an intriguing book.
Sorry. She gonna answer that?
I don't know, we'll see.
Kevin?
Thank you. On page 113, I want to see if I'm reading this correct, where it says electric distribution line from 2015 to 2022 was only 69 miles, but from 2022 to 2023, it dropped from 69 miles, the distribution line, to 120. So that's a very impressive jump for 1 year.
What did we do?
Unfortunately, that number I could not tell you. There's
But Taylor could tell you
supply.
more.
We can ask our electric people.
Yeah.
on that.
I have one you can
Sorry.
answer, though. The general cargo tonnage, I'm sure you're well aware of. It went from
Number of streetlights, you know?
Yeah, well, 2023, it went from 6,000 up to 24 cargo.
That's harbor.
That's the, coming through the freight dock and in the harbor.
Yeah, but why would that jump sevenfold, sixfold?
We're getting more.
The pipeline, but all those, yeah.
Through that one.
The railroad and
The railroad's hauling. You somehow managed to find the one section that is unaudited to make sure.
Right now on the top of these now.
We're just testing this.
Yeah, I'll look into the,
Okay, any other
That would be-
questions? We can go take a break if you're prepared. I know he's ready, he's been ready. so. Well, thank you very much.
Thank you all for having me back again. I appreciate it.
Any closing comments?
Thank you to my team again for this huge accomplishment, and thank you, Grant, for the hard work too, so, and thank you to the administration too. Yeah, I always have the support for you guys and also my boss too, so, yeah.
Okay, thank you. Well, I'll close this work session then at 6:21. We'll be back.